Everyone is looking for the next NVIDIA. But while everyone is fighting over the chips, a quieter war is being fought over where to put them. You can't just plug a cluster of H100s into a normal wall socket. They run hotter than the surface of the sun relative to their size. They need massive power, specialized liquid cooling, and infrastructure that didn't exist 5 years ago. Today, we are doing a deep dive into Applied Digital Corporation, ticker APLD. This isn't just a data center company, it's a builder of AI factories. They have pivoted from crypto to becoming the landlord for the biggest names in AI, and the market is waking up. The stock is up triple digits this year, but recently took a sharp dive. Is this a bubble bursting, or the buying opportunity of the decade? Let's find out. To understand $APLD, you have to understand their origin. They started in the crypto mining hosting game. Why does that matter? Because crypto miners are experts at one thing: finding cheap, stranded power in the middle of nowhere. While traditional data centers hug the coastlines near big cities, Applied Digital went to North Dakota. They found massive amounts of wind power that had nowhere to go. This gave them a cost advantage that is nearly impossible to replicate. When the AI boom started, they didn't have to hunt for power, they already had it. They realized that the infrastructure needed for Bitcoin high density, low cost could be upgraded for AI. So, they pivoted. They began building next-gen facilities designed specifically for high-performance computing HPC. This wasn't a rebrand, it was a rebuild. They moved to liquid cooling, reinforced floors, and fiber interconnects. They essentially turned power plants into compute plants. Here's the core thesis for this stock: the backlog. Most small-cap companies promise growth. Applied Digital has contracted it. In 2025, they cemented two massive deals that define their future. The CoreWeave deal. CoreWeave is the hottest private AI cloud provider in the world. Backed by NVIDIA, they signed a 15-year lease with Applied Digital for the entire 400 megawatts capacity of the Ellendale campus. This deal alone is valued at approximately $11 billion in revenue over its life, the hyperscaler deal. Shortly after, they announced $5 billion Australian lease for their upcoming Polaris Forge 2 campus with a US-based investment-grade hyperscaler. We don't know the name yet. Could it be Microsoft, Meta, Google? But investment-grade means the money is safe. Together, that is nearly $16 billion in contracted revenue. For a company with a market cap of around $7 billion, that is an insane level of revenue visibility. They aren't guessing if customers will come. The customers have already signed the checks. Let's talk about the physical assets. Their flagship is the Ellendale campus in North Dakota. This is a behemoth, 400 megawatts. They just energized the first 100 megawatts building in late 2025. This proves they can execute. Building these things on time is hard, and they are doing it. But they also have a second business unit, Applied Digital Cloud, formerly CI Computing. This is their GPU as a service business. Instead of just leasing space, they buy the NVIDIA chips themselves and rent the computing power to customers. They are an NVIDIA preferred cloud partner. This segment offers higher margins, but comes with more risk technology, obsolescence. However, it allows them to serve the GPU poor, startups and researchers who can't get chips anywhere else. So, if everything is so great, why did the stock drop approximately 13% recently? 3 reasons. 1. Valuation and momentum. The stock ran up too fast. Triple-digit gains usually invite profit-taking. 2. Debt. Building billion-dollar data centers requires billion-dollar loans. They recently priced $2.35 billion in senior secured notes. That is a heavy debt load. If they miss construction deadlines, or if interest rates spike, that debt becomes a noose. 3. Customer concentration. Right now, their future is heavily tied to CoreWeave. If CoreWeave stumbles, Applied Digital stumbles. Applied Digital is a high-risk, high-reward play on AI infrastructure. They have something the world desperately needs: power and space. The $16 billion backlog creates a floor that few other growth stocks have. They are transitioning from a story stock to an execution stock. If they simply build what they have contracted, the revenue will flow. Is $APLD in your portfolio? Or are you waiting for the debt to come down? Let me know in the comments. If you want to support the channel and help us keep the lights on, and maybe buy some GPU time of our own, check out our Ko-Fi link below. Remember, This is not financial advice.